grade 11s, we're going to have a look at notes in the financial statements, the capital note, as well as the current account note. So I'm going to go down to the capital account note first, because that's the first question. Okay, so it says that the partners each earn interest on capital. My gosh, it's too early in the morning. Each earn interest on capital at 12% per annum. Okay, and the partners had equal capital contributions on the first day of the financial year. So in other words, they both earned the same interest on the first day of the current financial year. However, then Susie increased her capital contribution by 20%. So she increased her capital contribution by 20%. And this 20% equaled 70,000 Rand. This happened on the 1st of September, 2023. Whilst Eddie, the other partner, decreased his capital by 20,000 Rand on the same day. Okay, so first things first, when is your financial year end? Your financial year ended on 30 April 2024. So that means that your financial year started on the 1st of May. Oh, it's not the drawing function on. Okay. So your financial year started on the 1st of May 2023 to be able to have a financial year end of 30 April 2024. Okay, so 30 April 2024. There we go. So in other words, they had from the 1st of the 1st of May 2023, 1st of May 2023, they had the same capital balances up until the 31st of August 2023, because then on the 1st of September 2023, they changed their capital contributions. Okay, so that's your starting point. They had for the 1st of May 2023 up until the 31st of August 2023, they had the same capital contributions. You'll see that I like adding the dates to my capital account, my note, just because it makes it easier to do the interest calculations at a later stage. Then I don't have to keep on going back and forth, question paper and answer book. Okay, so they are saying that Susie increased her capital by 20% in the current financial year, and that 20% amounted to 70,000 Rand. So going back to how did she get to this amount? So it was her opening balance of her capital. Why is my stuff disappearing? There we go. Her opening balance, she said that times 20% to get to 70,000 Rand. So in other words, times by 20 divided by 100. So we now need to get back to what was this opening balance. So we're going to do the inverse. We're going to say 70,000 Rand times by 100 divided by 20. Because remember over here, this is 20 divided by 100. So in order to do the inverse, we need to flip that and say that it's times by 100 divided by 20. So let's quickly get our calculator going here. There we go. So 70,000 times 100 divided by 20. So in other words, she started on a capital balance of 350,000. And they said that both partners had the same capital contribution on the first day. Therefore, both of them had 350,000 on day one. Right? So that's the first day of the current financial year. And they both had that until the 31st of August. And then they made changes to their capital contribution. So Susie increased her capital contribution. She didn't have any withdrawals. So she therefore ended on a 420,000 balance. And then Eddie decided to decrease his capital by 20,000 Rand. So he had a withdrawal of capital, 20,000 Rand. So he then ended on a balance of 330,000 Rand. Okay, so that is just the capital account. Then, whilst I'm busy with this, I'm also going to do my interest calculations because I know that I have to do my current account note. And current account note starts with the net profit as per statement of comprehensive income. I'm then going to take that profit of, as per the statement of comprehensive income, and I'm going to distribute the profits to the partners. First of all, I have to distribute their primary distribution, and that is salary, bonuses, and interest on capital. So those three amounts will give me my primary distribution. And then whatever I have, oh gosh, distribution. And then whatever I have left after that primary distribution, I will then distribute as a final distribution, whether it be that we had a loss or a profit, we then need to distribute that distribution. Gosh, okay, I can see it's Friday morning. My brain has already switched off. Then, once I have that, I have the total earnings, and that is the amount that you will have here for your net profit as per statement of comprehensive income. Then I'm going to deduct from that my drawings to see how much they retained for the year. So retained earnings for the year. Then I'm going to add that to the opening balance that each one of them had to get to the closing balance at year end. So that's why I said I'm now going to do my interest on capital calculation because I'm already busy with the capital note. So it just makes it a bit easier. So we're going to start with Eddie because his name is first. So Eddie started with a 350,000 Rand balance. And then according to the information, they earn 12% interest. So times 12%. He had this balance from the 1st of May 2023 up until 31 August 2023, as I've already noted there. So May, June, July, August. So for 4 months, he earned this interest. Then he changed his capital, still earning 12% for the remainder of this year, starting September, October, November, December, Jan, Feb, March, April, last month of the current financial year. So times 8 over 12. Whereas Susie had a balance of 350 as well to start off with. But then she changed her capital to 420,000 Rand, earning interest at 12% for 8 out of the 12 months. So 350,000 times 12% times 4 over 12 for the first few months. So that's 14,000 for both of them, because they had the same capital balance for the first 4 months. Then Eddie decreased his capital, earning 12% interest for 8 out of the 12 months. So that's 26,400. And then for Susie, she then had 420,000, earning interest at 12% for 8 out of the 12 months. So 33,600. Okay, so in total then, total interest, Eddie earned the 14,000 plus the 26,400, so 40,400, whereas Susie earned 14,000 plus 33,600, so 47,600. Right, let me just write here, total interest. Okay, and 47,600 there. Let me just double check because I'm not sure if I used, yes, I used that info. Okay, so then we go to our note and we say that Eddie earned interest on capital and Susie earned interest on capital. So both of them earned interest on capital. Right, so now I'm going, now I'm going to go back to my information so that I can do my current account note, or then complete the current account note. Starting with information A, it says that the percentage net profit on sales was 30% for the year. In other words, when we took our net profit and we divided that by the sales, this writing now, divided that by sales times 100, we got a percentage of 30%. Okay, so we now don't know what the net profit was. So net profit is the unknown, but we do know that the sales as per the statement of comprehensive income amounted to 1.8 million. So that multiplied by 100 equal to 30%. So now we're just going to do the inverse. We are going to say that 30, here we say divided by, so now we're going to say multiply by 1.28 million. Then we said multiply by 100, so now we are going to say divided by 100. Will give me my net profit. So let's do that real quick. Oh, now it's doing this thing again. Okay, let me just get this back. There we go. Okay, so 30 times by 1.28 million divided by 100. So 384,000. That was my net profit. I need to know what my net profit was because I now need to distribute that to my partners. So my total net profit that I'm working with here is 384,000 that I will distribute. First of all, in a primary distribution and then in a final distribution. Okay, so moving on, we already did our capital and our interest on capital. Then we have salaries. So it says that Eddie earns a monthly salary of 17,000 Rand, and then he also earns a bonus that is equal to 1 month's salary at year end. So that's already been provided in the answer book. You just have to remember that we are doing the financial statements for a year. So you can't have a monthly salary in your note. You need to multiply that by 12 to get his annual salary. Okay. Then Susie earned 192,000 Rand per annum in 2023 as a salary. This was increased by 5% since the 1st of Jan 2024. In other words, if your financial year started on the 1st of May 2023, so 1st of May 2023, she earned the same salary up until the 31st of December. Then that salary increased by 5%. So for that period, she earned 100% of her salary until it increased on the 1st of Jan 2024. I'm focusing so hard to write on this notepad right now because the handwriting is terrible on this thing. Okay, so up until the financial year end of April 2024, she no longer earned 100% of the earnings. She earned 5% more, so 105. So I prefer calculating the monthly salary first and then working from there. So her monthly salary was 192 divided by 12. 192 divided by 12. So she earned 16,000 Rand here per month. So 16,000 per month. And that then increased by 5%. So multiplied by 105 divided by 100. So then she earned 16,800 for the remainder of the year. So in other words, she earned May, June, July, August, September, October, November, December. So for 8 months, she earned 16,000 Rand. Then, let me just do that. Okay. Then for Jan, Feb, March, and April, so for 4 months, she earned a little bit more. So we're going to do that calc. So 16,000 times 8 months, she earned 128,000 Rand. And then she earned, for the remainder of the year, 16,800, so 67,200. So in other words, in her current financial year, or in this current financial year, her salary amounted to 195,200. And that then goes into the current account note. Okay, so that means that we can now calculate their primary distribution. So Susie with her salary and then also her interest. So this is her primary distribution. And then for Eddie, it's his salary plus his bonus plus his interest on capital. So there we have his primary distribution. Righto, there we go. Okay, so moving on. Then says that both partners withdrew all of these salaries, bonuses, and interest earned during the financial year. In other words, both of them withdrew their primary distribution. Okay. On top of that, Susie also withdrew her May salary as an advance during April. So in other words, she took her 242, but she also took another 16,800 because that's how much she earned per month by year end. So that is what she will earn for May. So where's our calculator now? So she took her primary distribution, and then she also took another 16,800. Please remember to have your drawings in brackets because this is going to decrease her capital, her current account balance. Then for Eddie also took his primary distribution first. And on top of that, he also asked for 31,200 to pay his child's school fees. And that payment has been made. It's been processed by the accountant in the current financial year. So he took the 31,200 plus his primary distribution. And that is then his drawings. So we'll go to drawings here, once again in brackets. Okay. And then we move on to the last bit of information. It says that the current account balances on the 1st of May was the following. So Eddie had a debit balance. In other words, he had a negative balance, meaning that he, in the previous financial years, withdrew more than what he earned, whereas Susie had a positive balance. Remember, capital and current accounts are equity accounts, and equity accounts have credit balances if it is a positive balance, and if it's a negative balance, it has a debit balance. And then the final distribution of profits is in a ratio of 3:1 for Eddie and Susie. So because Eddie's name is mentioned first, it means that he gets the first number in that ratio, and Susie then gets the second one. So in other words, we need to take our profits and we need to divide that in 4 portions in order to give Eddie 3 of those portions, and Susie then gets 1 portion. So I have already taken this 384,000 Rand and I've distributed that in primary distributions. So 384 minus the primary distribution, because that first needs to be distributed. So that leaves me with a loss of 120,200 that I now have to distribute as a final distribution. So in other words, I'm distributing final losses. And I need to divide that by 4 to get their portions. So Susie gets only 1 portion of the losses. Good for her. Okay, so just removing the negative there. And poor Eddie gets 3 portions of that final loss. So he's carrying most of the losses here. So in other words, if we then look at the total earnings per partner, we have Eddie on his primary minus the final loss. So that is his total earnings for the year. And then Susie with her primary minus her final loss that we distributed to get to her total earnings for the year. Right, so then we take their total earnings minus their drawings to get their retained earnings for the year. So total earnings minus the drawings to get to their retained earnings for the year. So obviously he took more than what he earned. So he's going even further into a debit balance here. And then Susie's total earnings minus her drawings. She also took more than what she earned in the current financial year. So there we go, negative balances. So therefore I'm taking the opening balance. He had a negative opening balance, right? And I'm going to now say minus a further 121350 because he took more than what he earned for the year. So he's ending on a negative balance, so a debit balance over here. And then Susie started on a positive balance of 14,900. And then she withdrew more than what she earned for the year. Oops, I took the wrong one. Let me just quickly take the right amount. I took her full drawings. There we go. So she's ending on a negative 31,950. Okay, so that is your current account note with a whole lot happening for the partners this year. And I hope you understand it a bit better now.